Hey guys, Matt McKeever here, coming to you from Waterloo. We're actually just like pretty much across the street from Laurier University, so really excited. We're here today with a REIN member, a REIN alumni, Kasey. So I don't know if you want to say a little bit about yourself or whether we'll just jump into the tour.
Just jump right in.
Okay, so let's just jump into the tour. So Kasey's going to give us a tour today. We got Adam as cameraman number 2, so hopefully we're going to get some decent footage, Adam.
Nice.
So yeah, do you mind talking about this building a bit, Kasey?
Sure. I bought this building in 2013. Essentially, it was for 3.15 mil.
Yeah.
It seems very high, so I had to raise. I thought I had to raise 25%, which just winds up to be about, let's say, 900,000.
Yeah.
It's about 900,000. I didn't have that. So right here, right in the parking lot, I spoke to the owner with my agent and his agent, and we started to talk. We talked about VTBs and whatnot.
Yeah.
And he goes, "Hey, this is not bad," because he doesn't know what to do with his money. So he lent me 12.5% of the purchase price, which is 480,000 or whatever.
Yeah.
So I had to raise about 480,000 as well. So what that means is that I was talking to him. I didn't have to raise as much. He took a VTB. He's in second position. Anything goes wrong, he take back his property. Plus he defers his taxes, which is a bonus for him. Also, when I was negotiating is that with, I'll just say his name is Tom.
Yeah.
Because his name is Tom. His rate was actually less than my first mortgage, and my first is actually with Community Trust.
Oh, okay.
So this is 3.15. I had to raise 480,000 approximately, and I didn't know what the heck to do because that was a lot at that time at 2013. That for me that was a lot of money, and I didn't want to sell any of my properties. So I actually this was my upgrade.
Was this was the first big building for you?
I had a 10-plex in Kitchener, downtown Kitchener as well, but this on a dollar figure, 3.15 was expensive. Yeah. So when people start jumping into it, it seems expensive, but once you put everything in place, and I was trying to look for investors and whatnot, I couldn't find any. Yeah. One investor bailed on me and said that, you know what, I won't go for this, but I'll lend you 200,000 at 8%.
Nice.
Oh,
that's
nice.
that shit.
Deal.
You know what? Yeah,
that's actually better. Yeah,
that's better.
that, right?
I paid him off, and then I refied this actually last week. So I took the money out, and essentially I just pushed the mortgage back out, CMHC, I pushed it back out to 35 years. Yeah. Cash flow is stronger. And this is a 51 bed student housing.
That's
so 51
awesome.
bed. Gross rent is 27,000 gross rent per month. But this is actually not something that this is not my normal play. This is not a value add. So I'll show you what I mean by a value add building. And this is not a value add because I can't push the rents. I can't push the rents up, right? And normally in a value add building, you want to be able to push the rents up. This is not a value add. So I'll tell you why we picked this and why I actually like this.
Perfect.
Nice.
Sweet. Okay. Let's do it.
So what this means is that I can push the rents up, I can do the renovations and whatnot, and then drive that rents up. But for this, let's walk in here. I gotta collect the change for the coin. But what I mean by this is not a value add is that I'm not raising the rents. The rents are already at that market, so you have to do your analysis and say, hey, if this is the market rent, what can I do to change it, get that expense lower? Yeah. Right? So I'm not, for some things, let's say for another building I can, the rents are low. Let's say it's $900 for one bedroom, $1,000 for a two. You can bump it up to, let's say, $1,100, $1,200, $1,300 or whatever that the market rent is. This one I can't. But when I looked at this, take a picture of that. Yeah. This is it. This is the mechanical. So when you're looking at the mechanical, there's no boiler. I only have 2 hot water tanks. Yeah. For the front half of the building, I have a back half of the building. So what this means is that this is baseboard heating. It's separately metered. They pay for all that. So my expense is really low, right? Yeah. So let's say your top line is, because I rent these out for about almost $1,600 a unit for a 3-bedroom. If my top line is $1,600, I can't raise it anymore. I'm gonna have to do something with my bottom portion, which is my expense, right? And that little margin, which we'll call NOI, that margin, that NOI, you just increase that. Either you increase it upwards or you decrease it downwards, right? So that's that portion that you want. You want a bigger NOI. If that net operating income is higher, then that increases the prices of the building, right? Very, very simple. So because I don't have a boiler system, I'm not paying for gas, water I charge back, they pay for hydro. Shit, I'm not paying for anything.
Yeah.
Right?
beautiful.
So that's what you want to do. It's like, again, this is not a value add. This is a student housing. Student housing, sometimes I get the guarantors from the parents and whatnot, but students are actually super easy. And they don't. If you do your regular inspections and whatnot, know how to run it. It's actually not very difficult.
Yeah, it's actually really interesting. A lot of people will give me flack at first about student rentals, right? They're like, oh, they're going to destroy your properties. Like, it's going to be nothing but headaches. Like,
so I have cameras right there. There's a camera right there.
Yeah.
So you're videoing me while I'm videoing you. Okay. So I have it. So it's on my phone. So if dude breaks something, I'm gonna see it on my phone. I can view it anywhere I want. I can be like the Matt who's gonna be on the beach, right? I don't do the beach thing because I have 4 kids, right? My wife, so I can't do that. I can view it while I'm in bed, trying to put the baby to sleep, right? It's like, hey, what's happening here, right? So you can always view it and whatnot.
Did you start with that initially, or is that something you?
I always do that. I used to manage apartment buildings, so I always put cameras in my common areas. To be honest with you, I don't trust people in a way because when they're in here and they have this and they have money, something's gonna go missing, something's gonna break.
No, that's awesome.
Right? So if you see something, it's like kids will break it, right? And seriously, I have 51 eyes here. If something breaks, right, all I have to do, because somebody broke my my glass door.
Oh, jeez.
Literally, I said, hey guys, here's a $500 reward for letting me know who broke my door. $500 cash reward, okay? It's not going to be you're anonymous. Seriously, 20 minutes. Okay, I'm not joking. Really? 20 minutes. I said, okay, dude, got it, done. I'm going to go and go to the cops. I'm going to basically, file a report. And I got him to pay. He paid me $300 for the damage, $500 for because I'm not paying that guy, that witness. He's paying for it. Okay, because he didn't tell me, right? Because I spread that. It was all like, if he told me right away, I wouldn't charge him $500 plus $100 on my time because I had to send him emails out. Right. So I charged him $900. So he had to pay $900 cash. So
that's awesome.
But yeah, student housing. This is something that I don't normally do. This is not a value add, but because of this situation, there's no boiler, there's no recirc lines.
Just
it's a lot
simple.
Very simple.
So how did this property get on your radar?
It was on MLS.
Oh, okay.
This one, usually when we purchase, it's not listed. It's usually quick, private, or whatnot. But something like this, it was real quick. It was like 1 or 2 days. I met the owner in the parking lot, and I think there's another group as well. So they came, nice fancy car. I came in my Toyota Matrix, right? So I was like, let's take a look. I didn't think. I always give several offers. I gave 3 offers.
Nice.
One was 20% VTB of the purchase price, and I said I won't give you 3.15. I'll give 3.2, right? And then I dropped the rate down. I think I dropped the rate. Whatever worked out, I think I dropped the rate down a little bit lower, like 2 or 3%. Then I gave him it was 12.5, so basically 50-50. And the rate was around, I said 5%. And then I said, hey, if you want 2.8 or 2.7, cash done. Like I gave 3 offers. I said, here it is, because it's better to give an option. It's not usually if they give one offer, they're just gonna turn it down, right? So you give them 3 offers, and it's like, okay, let me look into it, right? So then he just came back and said, okay, well.
The cover letter's a good approach too when you're giving those 3 offers.
You can't.
Here's what I intend,
that's right.
Here's
cover letter is amazing. But I didn't have the cover letter because he was showing it, right? It happened so fast, right? But you just have to be on your toes, right? So if you're willing to, give an offer verbally, put it down on paper after, right?
For sure.
So.
That's great. I know he's like playing that human element, right? Because there is that there and every deal.
So this I always buy. It doesn't seem like it's a lot of money. Payback period is actually very good. It's very quick. But yeah, I always keep all my buildings separate, and I actually do put it in to my rent, like in the rent. So it just makes it nice and strong, and it's consistent, right? And I'll buy it the best used one you can buy. All right. So I don't buy new.
That sounds very familiar.
right? Oh, who else does that?
Yeah, I've heard that before.
Yeah, you just buy the best used ones, right?
Yeah.
So a used,
What do you figure those costs?
a set is about 1,200,
Oh,
600 each.
not at all.
No. So this will pay for itself probably, it's usually less than a year.
Wow.
So the payback period is less than a year.
You figure half the building is using this set?
Yeah.
Or you go apples through?
I have a set here and a set at the back, and that's all. When we saw that, the back section, they have that back section as well. I always try to empty it. I have cameras there, but if somebody breaks in, I'm out of luck, right?
Yeah. So there's about 75 students using these?
51.
Okay.
51. No, this is 18 units. 16 threes, 1, 2, and 1 dash.
Okay. Got it.
Okay, yeah.
Got it.
Okay. So for this building, not a value add. I'm trying to look for buildings that doesn't require that much like work up front. So
Yeah.
if there's a lot of deferred maintenance, you're gonna work that into your price. So when I walk this building, it seemed pretty solid. So there's a concrete brick and block construction built in the 1980s. Most of my buildings will be in 1960s and 70s. That's that
Yeah.
vintage.
Mhm.
The reason being is that they built in 1960s and 70s. 1980s they stopped building
Yeah.
because the housing boom.
Yeah.
All the developers moved to the houses. There's big housing boom from the 80s to the 90s, and then they had that crash basically. 1989, 1990, they had a big crash. So your market, right? Like my market is 1960s and 70s built, and that's what I'm looking for. With not a lot of deferred maintenance, something that's fairly decent. And if there is, let's say there's a boiler that's shot, roof, you got to know these prices. So
Yeah.
I changed the boiler. It's a 1.2 million BTUs, 32 unit building. It's about 28,000 all in, labor and everything, right? But you're gonna work that into your price
Yeah.
when you negotiate, right? So this building in itself, concrete block and brick construction, concrete floors, slab, so it's not a stick build. But in reality, this has nothing to do with rent. Nothing to do with NOI.
Yeah.
Yeah.
Okay? This is just, you have your physical building, and then you have your rents, your tenants and things like that, and then you have your whatever, your legal and whatever. It's like there's a lot of different pillars that you have to work with, right?
Yeah.
But the building aspect is that if I have less work here, I can put my effort into. Yeah, so I can put more stuff into the buildings inside the units. Excuse me, inside the units I can renovate or whatnot.
Yeah.
But this one I didn't really renovate because it was actually in good condition.
Gotcha. And so, do I remember correctly? Do you live in Toronto?
Yeah, I live in Toronto.
So,
I live in-
what made you decide to invest out of town, like invest in Waterloo and London?
So research, right? Like actually, REIN just said, you know what? Actually, I did invest in London as well. KWC.
Yeah.
But then KWC's their GDP, their growth is actually stronger, and I saw the upswing with the housing prices.
Yeah.
So we started divesting most of my houses into more multifamily, about 2010 to 2013.
Okay.
We started selling most of the houses, and then basically getting into this as well. Actually, 2013 is when I sold my first triplex downtown Toronto.
Okay.
Yeah.
I like to believe your purchasing power is a lot stronger here too, right? Same pool of capital you bring here, more units, more.
That's right. That's right. So per unit, it's gonna be a lot cheaper. So we bought these for like about 160 a unit, 165,000 a unit. If you did that 1% gross rent multiplier, whatever you guys want to do, you can slice and dice any which way you
But
want.
it still fits that model. Still. Yeah.
It fits that model, right? So I rented for about $1,545 plus parking, so it's about almost $1,600, okay, per unit. And we bought it for about $160,000 per unit, right? And they pay all the utilities, right?
Beautiful.
Yeah.
That's a perfect deal.
So, but that's about it.
Yeah,
That's
awesome.
and so again, it's. So I would take annual inspections and whatnot for fire.
Yeah.
This building is actually pretty quiet because of the construction.
And so you manage all your own properties currently? Yeah.
It's super easy.
Yeah. So do most of your tenants now do e-transfers, or are you still checks?
Actually, e-transfers, checks or PAD, so a pre-authorized debit.
Yeah.
And I would pull. So in a building like this, I'm looking for concrete block and brick construction, something that doesn't have a lot of deferred maintenance. When we bought this, I had minor stuff. This front step was completely wrecked. So all I did was get that changed. And that was only $1,800.
Yeah.
So it's not a lot. I put these handrails.
Railings. Yeah.
Railings, you don't need it, but if somebody falls, liability is on me, right?
Yeah.
So I rather put it, and I rather salt it, like over salt it, and just make sure that there's no slip hazard, right?
Yeah.
So what I'm looking for, this easy, 2.5-story walk up, no elevators. Preferably, I don't want a balcony because there's more headache.
Yeah.
More work, right? So there's balconies on that side, no balconies on the drive path. What else? So deferred maintenance was the front step. Come on over.
Yep.
When
And so is there a certain way you approach a vendor when you're talking about vendor take-backs, or do you just, it's literally you include in one of your 3 options at least and see what happens?
most of them don't want it,
Yeah.
but you can always ask. We're doing a deal in right across from. We were asking for a vendor take back, and he didn't want it. I asked him yesterday, and he didn't want it. Obviously, it's been in his business, or it's been in his family for the last almost 50 years. So he just wants to get out. So you can tell him the benefits and all that. But if it's not for him, it's not for him.
Yeah.
You can always ask. But
Do you find, like, if you try and really lay out the benefits and stuff, can you convince people, or is it usually like they have their mind made up from the start?
Yeah, they usually have their mind made up. If they don't know, like the gentleman Tom here for his Elgin Street property, he didn't know. I don't think he knew too much about it. But when he heard that, there's a lien against this property, your second position, after that, he was a little more comfortable.
Oh, okay.
Yeah, so I found like really laying it out for people helps a lot.
Yeah.
And then another tool too that I used doing my vendor take back was actually bringing an amortization table.
Yeah.
It breaks out all of the payments for that period of time. It breaks out what has been paid in principal, but more importantly, it breaks out the interest payment of that portion, right?
That's right.
So they can see really clearly in my case, they'd made an extra $60,000 on a 240 purchase.
Yeah.
So you're like, holy shit, now you're not selling me 240, you're selling me 300.
That's right.
Right? And that's amazing.
That's actually better. Yeah, that's better.
And then at the end, you still show them that balloon payment or however you're structuring it, right? So at the end, I still had a $160,000 balloon payment. That sounds great in this scenario.
Yeah.
So it's getting to that why, right? Figuring out why they're selling, what their motivations are, and what they need.
See, that's smart.
That's kind of how
showing people like something visual can really turn them.
They can hold it, right?
That's right.
And here, keep this.
Yeah.
Here's the offer. Here's all the legal literature. It looks complicated, but it's really not. I'll explain it to you.
Yeah.
Look at this amortization table. That's all you need to see.
That's right.
Numbers don't lie. Right?
That's right.
That's what you're going to get.
That's right.
So I think that's really key to the vendor take back.
That's right. And go back to the building. So let's go back to the physical building. There's a whole bunch of icicles here. So when you see icicles here, there's a lot of heat loss. So heat is coming up, hitting the roof, melting the snow, turning it into water, and basically overshooting the eaves trough. And there was, right where this downspout is, there was a block of ice that literally if it came down and hit somebody, it would have killed them. It was literally that heavy. So just repair that, insulate the heck out of that. I think I blew in, normally it's an R, I think it was 40 centimeters. I blew in 50.
Oh, okay, yeah.
It winds up to be about $1 anyways, a square foot. And some people, I think, overbid. So their price was $10 a square foot. So I won't tell you the contractor. Normally it's $1 a square foot.
Whoa.
I actually said to this contractor, I'm the owner. So, like, little tip. You don't have to say you're the owner.
Yeah.
Usually on my old cards, it actually says that Kasey Wong.
PM.
No, I said tenant service rep.
Interesting.
Right? Yeah, I said I'm a tenant service rep. I'm like, I don't know buildings. My manager told me to get a quote. But for this one in particular, if you want to ask me who the contractor is, but that'll be private. I don't want to.
Yeah.
But $10 a square foot. I emailed them a couple times, no answer. And they're a big company.
Wow.
They're a big company.
That's unreal.
Yeah. So just minor parging work, some tuck pointing and whatnot. Other than that, there wasn't a lot of work. I put that ramp there for easy access for people moving in and out.
Awesome.
Plenty of parking here. So for some of the students, they want that. I think I didn't charge enough. Normally I put $30 a parking spot, and I think people are charging a lot more. So there is money here. My wife is always saying, you know what, I think your top line is not high enough, right? So I think this is the case. So it's packed here. So $30 is probably going to be $50 a month.
Yeah, for sure. I can see that.
So definitely for that. Other than that, it's we bought this under our personal name. It wasn't under corp. The benefit to that was getting solar panels. So I increased the revenue as well. They don't have a contract for, like in Ontario, depends on where you're investing, but in Ontario they had that back then. And putting a solar panel system in was about $35K, and it generated about, say, $400 to $600 a month.
Oh, okay, yeah.
Okay, per month. Yeah, and there's no tenants.
Yeah.
Yeah, yeah, exactly. So it was a guaranteed contract from the government, and they automatically pay as long as the energy that's generated goes back to the grid, right? And you don't even see it.
Yeah, no,
Yeah.
I've noticed
Yeah.
it, but I saw
Absolutely.
it inside your utility.
Yeah, yeah. But that's about it. Very, very easy to manage.
Cool. Yeah, this is an awesome building. This is definitely this is the type of building I eventually want in my portfolio. So.
But seriously, this is $200,000. I put down
I know, that's crazy.
$200,000 5 years ago.
Yeah.
So it's not that bad, right?
It's unbelievable.
Pay back my my friend.
Yeah.
The 200. Actually, I put in 270. I bought 200, so it's 270 in.
Yeah.
I pay back after 2 or 3 years. I pay that back 8%, paid monthly. Okay, and then I refi this with a CMHC loan.
Yeah.
Right.
That's awesome.
Were you
And
doing
it-
interest only, that 8%? Your payments?
Yeah, exactly 8%. Interest only, principal at the end. Yeah, simple.
Yeah. And then as far as where you actually found those people to lend you the money, I'm assuming that came from REIN and networking and all that.
It was networking.
Yeah.
So Matt, I'm a little bit older than you, okay? Keep on pushing. I guess my network, yeah, they're a little bit older and they have some money under HELOC or whatnot. But my group is 40 to 50 years old.
Yeah.
And then they do have some savings. And they don't mind doing a HELOC. I give them 8, they pay 3, they
make
pocket
the spread.
Yeah, they
Yeah.
make that spread, right? Very, very simple.
Yeah. Oh, that's awesome, man.
Yeah.
This is perfect. This is the exact type of properties, guys, I eventually want to add to the portfolio. This is fantastic. And again, the way I met Kasey was all through REIN. It was just networking. I'm telling you guys all the time, you just need to be focused on networking. Smash that like button if you got value from this video. I know you did. If you're new to my channel, hit the subscribe button, and we'll have some more videos with Kasey coming up in the near future. Thanks, guys.